Thank you for joining us for today's webinar. Today we're joined by Phil Quinn from Pepper Money, talking us through the specialist buy-to-let market. So very quickly then, who are Crystal Specialist Finance? For those of you that are new to our webinar series, we are a specialist finance distributor with over 80 lenders on panel across our 6 main business sectors. On there we include both exclusive and semi-exclusive products and lenders. We are 100% dedicated to the intermediary, including training, BDM visits, and ongoing case management and case handling. And as you can see there, we are multi-award winning. We're a family-owned business with over 200 years collective specialist finance experience. And our motto, as you can see, is making specialist finance crystal clear. This is just an example of a couple of awards that we've won over the last few years. We're passionate about specialist finance, so what does that mean to you? First of all, you've placed your trust and your customers' trust in us, so it's up to us to talk to you to provide updates on your cases and not hide behind technology. Technology is a great facilitator and an enabler, but it shouldn't replace the need for specialist people. We know we're only as good as the last case we've dealt with for you, so we want you to send the next one. So it's up to us to assist and support you throughout the life of that case, and sometimes even beyond that where needed. Our flexibility means that we can find unique solutions for your customers, and our experience means that we have relationships with many lenders that no one else in the industry has. We aim to respond quickly and to complete your case in as short a time as possible. Our model is built around basically no win, no fee, so if we don't complete your client's case, we don't earn any money. So for us, it's about making sure we can deliver and that we can deliver in a timely manner. We're very big on education, so events like this today, where we try to provide you with updates on market trends, provide you with webinars, material, information from lenders, to make sure that you are one step ahead and that you can assist more and more customers when they come to see you. And specialist finance is a huge opportunity, let's not forget that. It can appear daunting, however, we'll assist you with your current case, but also help you to find new ones as well. Any fees will be discussed and agreed up front, so there are no hidden surprises for your client at the back end. And we're all human, so we are aware that cases will hit problems. It is the nature of specialist finance that it is tricky, it is difficult in certain circumstances. So it's up to us to proactively take action to seek to resolve the issue, to provide an alternative lending solution, or give you a heads up as early as possible that this is a deal we're unable to help with. Having said that we are people focused, for us internally the work is continuing on our technology proposition. It's up to us to provide market-leading specialist finance technology solutions. We use these as a way to deliver on our promises and to make our internal guys' job as easy and straightforward as possible. As you can see there, we've got over 200 years combined experience in the specialist finance sector. We don't do anything else. We don't do vanilla. We don't do insurance conveyancing or anything like that. For us, it's purely about the specialist finance market. We know our strengths. We stick to them. We do it well. So our strengths are in the specialist finance market. We know the true breadth and depth of products available. We understand each lender's appetite and we work closely with them to understand their processes to ensure we can get your deal done quickly and efficiently. So again, it's over to us to explain to you the process, timescales, what's required from you and your clients in order to get that completed. A few examples there of where we really do excel, things like adverse credit, low credit scores, tight completion deadlines, overseas borrowers, unusual property types, or where we have to consider all income sources. So, specialist buy-to-let. Following on from the tax changes that were so heavily publicised over the last year or so, there is a continued shift towards the use of limited company vehicles, particularly for new purchases. And we're seeing, over the next couple of years now, we'll see this impact on the tax return of your professional landlords in much more detail. There are certain benefits of holding properties in limited company that don't exist to personal landlords. Now, we're not tax advisors, so it is very important that your clients do talk to a tax advisor on what's best for them, because what's best for client A isn't best for client B. So it is really important. We can't stress too much. We can't overstep the boundaries between providing mortgage advice and providing tax advice. So some research done recently, a third of landlords are looking to remortgage within the next 12 months. And of those, 19% will do so within a limited company. 26% of landlords, of portfolio landlords, are more likely to remortgage within a limited company in the next year. So these are landlords with more than 11 properties. Now that you'll know from doing your standard buy-to-lets does push them outside the remit of a lot of buy-to-let lenders. Commercial really have embraced this sector. So rates are now extremely competitive with the standard buy-to-let market, and the process is becoming much more aligned as well. So if you have got clients that are looking to purchase properties, obviously you should be looking at referring them across to a tax advisor to see with the best structure to do that. And if they are looking to remortgage, then by all means pick the phone up to us. Let's see what's available. Let's have a look at the cost difference between the different options that they've got open to them. And again, look for the right solution to your client. It is that personal approach. It's about understanding what your client's looking for rather than it just being another loan that we're just going to put to another lender. Again, HMOs, excellent rental yield opportunities. We've seen a lot of conversion over the last couple of years from buying a typical investment property to converting that to a HMO. So what we're seeing there is that 40% of landlords that own standard terraced houses are looking to sell them. But by contrast, only 8% of landlords with HMOs plan to sell those. So there must be a reason that they're holding on to the better assets and selling off the ones that might not be making as much money. So 21% of landlords are looking to add HMOs to their portfolio in 2019 to 2020. Typically 0.8% increase in rental yields over 2019. And normally landlords with 11 or more properties have got a more diverse portfolio with 3 different property types in there. And again, this is really good for the shifting sands of the economy. So if tenant appetite changes, or if customers want a different type of property to live in, if you only own 1-bed flats or studio flats, then it's very difficult for that landlord to keep a tenant within their portfolio. Whereas if you have multiple property types, you can quickly adapt to changes and to maybe even keep that tenant within your portfolio if you wanted to do that. So the specialist buy-to-let market, as you can see there, rates from under 2%, LTVs up to 85%, and limited companies accepted. Now most lenders want SPVs or purely property companies. There are a number of lenders out there that will accept trading companies as well, so it's certainly worth picking up the phone and speaking to our guys about that. Again, HMOs are excellent. We can still consider adverse credit, consumer buy-to-let, vacant properties, and throughout England, Scotland and Wales. So a couple of case studies here for you just to bring those scenarios to life. Broker approached us there with a large portfolio with a complicated overseas structure. So in this one, the case was for a BVI registered limited company. 3 directors in Singapore looking to remortgage a 5 million portfolio to redeem various existing lenders. But the important part was that they also needed to pull out additional capital to buy more properties. Added to this, we needed to top slice the rental income in order to service the loan as it was short of standard calculations. So we got this done full loan amount, utilising a lender that took a commercial view on the rent, sourced offshore opinions to confirm the structure was all straightforward and above board, and we got this completed within 3 weeks of the application coming in. So specialist does mean tricky, it doesn't mean impossible. It doesn't necessarily mean long timescales or expensive either. Another one for you, client owning 2 small buy-to-let properties in the southeast wanted to purchase more. He'd seen the news story, saw that yields were better for him outside of the southeast, so identified 4 properties up in the north that he wanted to purchase. HMO, buy-to-let, new build flat, and flat above a shop. So the issues the broker was facing there, lenders were querying how could he manage those properties in the north while he had his main business in the south. He got no experience at running a HMO or a flat above a shop. How does that differ to what he does normally with his standard buy-to-lets? And all 4 properties were worth under 75,000 each. So approached a commercial lender who viewed that, did the whole portfolio, 1 transaction at 3.89 on a 10-year interest only. Due to the manual underwriting involved, commercial lenders are much better placed a lot of the time in order to take a view on situations. We can also probably expand that now into the specialist buy-to-let market where the lenders don't rely on online calculators. They don't just rely on a decision system to say yes or no. They actually get the paperwork out in front of them, review the case and decide whether this makes sense from a lending point of view. So very quickly then, how it all works, contact us any way that works for you. Email, portal, phone, come and visit us, see us at any of the numerous events that we do across the year. The key there is to place an inquiry with our new business team. Let's have a conversation, let's understand what you're looking to achieve. The team here will then source the most competitive product and issue the most relevant terms to you. Once you receive that, you can discuss that with your client, get them to apply, complete the application forms, pay the valuation fee where appropriate, and get that case into us. Our processing team then take over the case and will handle every step of the way there and keep you informed. Key thing with us as well is that we also work with the solicitors to get the case fully completed and funded. We don't see our job ending when an offer is issued. For us, it's about getting that money released to the client to either put into their bank account or to pay off their existing loan. And again, as I mentioned at the very start, for us it's no win, no fee. So if we don't complete the transaction, if we get all the way through to legals and then there's a hiccup, we don't earn a penny. So for us it's about working through the problems, identifying where we can fix them, where we need to come back for further information, and really looking to add value to that transaction. And there's never been a better time to look at specialist finance. The market is changing constantly. Client demographics are changing. Products are changing. Property types are changing. And of course, lender processes are changing and adapting. So for a mortgage broker, it is a very tricky time. So therefore, pick up the phone, speak to the team at Crystal Specialist Finance, and let us really add value and help you with those more complicated cases. Well, that's me done. So thank you for listening to my part there. Gives me great pleasure now to hand you over to Phil from Pepper to talk you through their presentation. Thanks, Phil.
Hello, my name is Phil Quinn, National Account Manager at Pepper Money. Thank you to Crystal Specialist Finance for arranging today's webinar. And I'd like to talk to you today about the buy-to-let market and give you an update. Firstly, I'd like to show you a video about our interesting cases.
We're a lender that helps people when others can't or won't, providing specialist residential and buy-to-let mortgages for clients with past financial hardships, young credit histories, adverse credit, the self-employed, and those with complex or irregular income sources. We call them interesting cases. We've dealt with a lot of them since 2015, but it's about more than finding a home for interesting cases. It's about getting Sarah a place to call her own, despite a recent CCJ. Our 6, 12, 18 and 24 products are here for those who've had troubles, even in the recent past. It's about getting Ben and Dan onto the property ladder. Despite being self-employed and with multiple sources of income, we've helped find a product that works for the way they want to work. It's about building Brian a retirement plan with an approach to lending that suits his circumstances, even for buy-to-let. Our criteria are more flexible for clients with interesting cases because we take into account more than just a credit score and a static income figure. It's about helping people succeed on their own terms. See what we can do for you and your clients. Register with us today.
So let's have a look at the rental market. Well, what we do know is that 26% of landlords have put rents up in the last 12 months, and 24% of landlords intend to put rents up in the next 6. 65% of landlords have at least one property let out below the market rent, and £85 is the average amount rent is subsidised by. £700 being the average monthly income for a 2-bed flat, excluding London, and £870 a month being the average for a 3-bed semi, again excluding London. Let's have a look at those common reasons then why rent is increasing. Well, firstly, to cover increased costs of running a property. With a raft of tax changes, landlords are wanting to claw back some of their income, so increasing rent, and general scheduled annual increases. The common reasons for rent decreases are if there's weak tenant demand, to secure longer quality tenants, and also to keep their current tenants because they are loyal. Some of the facts for Pepper Money when it comes to buy-to-let. So first of all, it accounted for 24% of our business in 2018, and we expect similar figures for this year. 46% of the landlords were self-employed, 52% had a missed payment, 86% of all of our buy-to-let business was remortgage, leaving 14% for purchase. Now, referring back to the 52% who missed a payment in 2018, it's great to see that a lender like Pepper serves the adverse market as well. So if you have a landlord and they've had a CCJ, a default, mortgage arrears, poor credit score, we are able to help. The products we offer are on a tiering system to reflect how recent or historic the adverse is. They range from Pepper 6, Pepper 12, 18, 24, 36 and 48. The number of months refers to when the applicant had a CCJ or default registered against them. For example, an applicant had a CCJ registered 13 months ago. They will fit on our Pepper 12 product range, none in the last 12 months. The great news is that the CCJ doesn't have to be satisfied and there is no maximum value. Pepper 48 happened to be our best performing product for buy-to-let. When we take a look at our growth over the last few years, year on year, we've increased the number of buy-to-let completions. Once we hit the end of 2019, we will be up again from 2018. And the value of those completions is as follows: 64 million 2016, 82 million we completed in 2017, 129 million last year, and this year we're looking at approximately 140 million. We believe the complex buy-to-let is the new normal. What was rare on a mortgage application is now run-of-the-mill. Circumstances that were once unconventional have become the new normal, and they're the interesting cases that are making up more and more of your workload. A broker in the southeast said to me, "A young couple have come to me for a mortgage. One of them missed a £3.42 credit card payment on their store card 8 months ago, and suddenly they're now a specialist case. They're not normal." Interesting cases can generate a greater return for you. So if you're a broker that charges a fee, what we know is that 47% of brokers charge up to £500 if they're placing a mainstream case. By contrast, a higher proportion of brokers charge a higher fee when they're looking at specialist lending, 35% charging up to £1,000. This is excluding any enhanced proc fees. If we look at it per hour, £44 on the broker fee for a mainstream case and £58 per hour on a specialist case. So that's an extra £14 per hour that you will make by placing a specialist case, with the average time being 13 hours per case. Pepper was created because of a need. A lot of people being held back by the existing system. We're a big believer where mainstream mortgages stop, we start. Now last year, 77% of our completions excluded an applicant who had CCJs, and only 1% had over 3, but we do expect that to increase when we get the final figures for 2019. At Pepper, we're committed to making the interesting cases easy. We've got a fantastic application system. Crystal are very experienced at using it. The products we have are simple, they're transparent, they're easy to understand. We're always reviewing our criteria and adapting to the market, and the cases are reviewed by a mandated underwriter on day one. I can't stress the value that a mandated underwriter making common sense decisions has on getting that case over the line. So let's have a look at a case study. This is a buy-to-let landlord who had a credit blip. Business owner Tony wanted to remortgage his buy-to-let property in order to invest in additional properties. High street lenders had issues with his income. Our underwriter was able to quickly understand the issues and process an offer. And because he had a credit blip, it became difficult to find the right mortgage. Our second case study is an application for buy-to-let remortgage for capital raising by 2 applicants. Maria is aged 72 and works part-time with a salary of £10,000. Luke is 70, working part-time with a salary of £8,000. They own 60 properties between them, and they require 80% loan to value over 12 years. Now the great news is we're a pay rate lender when it comes to buy-to-let on 5-year fixed rates. We stress at 140 irrespective of the tax band, and our blended average rate is 3.5% for a 5-year. Great news, we go up to 80%, and we can also lend up to age 85. When it comes to portfolio landlords, we don't stress the background properties. We will ask for an explanation of a business plan, and we will ask to see the portfolio, but providing it's self-financed, it will pass our checks. We are not individually stressing each property. It's a great USP for those larger portfolio landlords. In conclusion, we're in interesting times. Cases are becoming trickier to place. Use the services of Crystal, who in turn know how Pepper operate, and we can find a solution for that complex case. Thrive with Pepper. Thank you for listening, and thank you again to Crystal for organising today's webinar. Bye for now.
That concludes today's webinar. Thank you all for tuning in and listening. And remember, if you do have any cases you'd like to discuss, please give the guys a call, 01827 301070. I'm more than happy to discuss your needs with you. Thank you.